Good day. How's everybody doing today? Um, Start off by saying compliments of the new year to all Forex Varsity clients slash students. All right. So this is the first video for 2018. All right. So as the market uh, volume around the market still pretty much low, being early in the new year. All right. So we haven't had too much movement. However, what we'll be covering today is basically these four pairs: euro dollar, euro pound, dollar yen, and dollar CAD. And what I've done in this video is basically uh, in this video, I'm going to talk you through these four currency pairs. All right. Just giving you the idea behind each of them and what to look out for. And what I've done is the charts themselves. Okay. As you can see, there's the links in this video. Okay. These will be sent to you via email. All right. So then what you can do is when you go through each chart or open them up separately, as I go through each pair, you can then just reference on the chart exactly to what it is that I'm talking about. But I've done the charts in a way where it's just easy to read. The chart is basically self-explanatory, right? So it's not going to be a long video, all right? So uh, behind this video, basically, the topic we'll be discussing is key levels to watch from basically today up until next week, Tuesday, all right, on these specific pairs, all right? So when you open up the charts, you'll understand basically what's going on. So starting with the euro dollar, okay? So you'll see on the chart, basically, there's certain areas where I've marked out Thursday. Some of the charts I've marked out Monday, Tuesday. So what you got to do with this video is if you see on the specific pair, there's an area where a price level marked out as Monday or Tuesday. For example, dollar yen, there's an area marked out for Monday. So come next week, Monday, since today's Thursday, you should pay attention to that specific level. In this example, dollar yen on Monday. And the level marked out is 11200. So that 1200 area will be a level of interest as of next week, Monday. And if you see dollar yen around 1200, then it should give you an idea of what to look out for. Or maybe you want to sell off the area or use the area as a stop loss or potential target, etc. So all the charts are pretty much self-explanatory. If it says Tuesday on the chart, then on Tuesday, look for price to hover towards that area or away from that area, and then you can potentially use that again, those areas as either entry, stops, or take profit. All right. So with that said, let's start with euro dollar. Okay. So with euro dollar, okay, we've got levels of interest for today marked down at much lower levels. All right. And with euro dollar, I've basically on the chart based on those levels. Okay. I managed to mark out an entry level. Okay. My bias is to short the euro dollar. Okay. Based on those levels. And I'm looking for an entry at 1.2150. As you can see on the euro dollar chart, with a stop loss at 1.2220. 2210 and take profit down at 1.2025. All right. So the bias is that euro dollar will sell down based on that information, and the time frame is we've basically selected the 4-hour time frame. Reason being is it's for swing trading, so it's to incorporate any movement between today, the end of the week, leading up till next week. Okay. Then moving on to the euro pound. Okay, so euro pound, okay, it needs to clear the 61.8% Fibonacci level, okay, which comes in at 0.8825. So provided euro pound can clear that area, we can then look for euro pound to target the level marked out in the chart. All right. But the main thing with euro pound, it's got to clear the 61.8. Reason 61.8 is important, it would indicate a trend reversal. So the bias is to be long euro pound. However, the bias is to be short on euro dollar. Okay. Then going down to the third chart being dollar yen. All right. The bias is to be long of dollar yen. Okay. So initially we're looking for upward movement towards the 61.8 Fibonacci level, which comes in at 112.55 area. Okay. As you can see marked out on the chart. Then look for a small retracement on Monday, back down to 1200. So it's about a 50 pip retracement that we'll be looking for on Monday towards 1200. So obviously, in order for this to happen, we'd need the dollar yen first to go to the 61.8 fib level around 112.55. If that happens, then on Monday we can look for a small retracement towards 11200 area, which is the 50% fib level. All right. So please take these with a pinch of salt. Obviously, the market can overshoot the initial area of 112.55, maybe go to 60, 70, which is fine. And on Monday, it doesn't mean that it's going to, stop or get to 1200 level. It could just hover and range around there on Monday, as it's a area of interest. Okay. Then the dollar CAD, the bias is to be long dollar CAD. All right. So the area of interest is around the 50% fib level. Okay. For next week, Tuesday, that is. All right. So again, when it comes to dollar CAD, you should really pay attention to that 50% fib level come next week, Tuesday, to see, are we around there? Are we trying to break through them, etc. Okay. Then also in the dollar CAD pair, I've marked out a double bottom pattern. Okay. That's currently in the works. For those that know the double bottom pattern, the safe entry would be the neckline, okay, and the neckline comes in as marked out at the 38.2 fib level. So between now and next week Tuesday, obviously if dollar CAD can break through the 38.2 fib level, then you could enter long based on the double bottom pattern, right? Then you would ideally like to see it get to the 50% fib level or break through it or higher, possibly from next week Tuesday. Then in reference to the double bottom pattern, okay, for those familiar with this pattern, basically the rules for a double bottom is if you measure the distance between the neckline and the actual bottoms, right? You can use the crosshair tool for that. You'll see that there's about 200 to 215 pip uh, uh, gap or distance between the neckline and the bottoms, which therefore would be a potential target, meaning that if dollar CAD can break through the neckline, it can possibly then run for 200 or 215 pips higher, okay? Which means that the potential target on dollar CAD, one, if it breaks through the 38.2, number two, gets through that key level next week, Tuesday, then we could see dollar CAD potentially run all the way up to the 1.2775 area, okay? And just to recap again, you just got to open up these links on the four charts, right? All the levels are marked out, okay? It doesn't mean because the levels are marked out that price will move in that direction. It's just a basic guideline. However, those areas are potential areas of interest looking forward. So if you see a level marked out with Thursday or Tuesday or next week or Monday next week, then on those specific days, look to see how price reacts around those levels, okay? And then use those levels either as an entry, a possible stop, possible take profit, right? Then again, the bias on euro dollar is to short it. The bias on euro pound is to be long. The bias on dollar yen is to be long. And the bias on dollar CAD is to be long. And just use those levels as key guidelines, all right, and see how it goes.